Even the S&Ps end the week heading lower, but do close out the week higher from last Friday. Today we did see a move north of 4,000, the highest we've seen since going back to June 10th, but ultimately saw a reversal in the afternoon, a risk-off type of move, taking us all the way down to 39.50 or just above as we headed into the close. E-minis have been trending higher going all the way back to July 14th. So while we did see a little bit of a pullback this afternoon, certainly that trend remains intact. The market right now dealing with a few different variables out there, one being the Federal Reserve. How much will they hike and how will they continue to hike as we head further and further into 2022? Likewise, is there a recession on the horizon for us? Growth numbers right now, hovering expectations are in the negative territory. That would be 2 consecutive quarters if we get the second quarter GDP to come in negative. So recession fears, central bank fears or concerns, as well as earnings. Earnings right now, it's very difficult to forecast profits down the road when you're really not sure how the economy is going to be standing. So at this point, a lot of uncertainty, a lot of questions out there hovering over the equity markets, and they continue to outperform, at least in the short term, going back to July 14th, ending the week higher, but the day lower. Now, what does this all mean for volatility? Well, the VIX index has been stubbornly low despite all that uncertainty I just mentioned. It's going to end up closing out its lowest week since late May, and still hovering below 25. So I haven't seen any real movement out of the VIX index which would suggest fear in the market, at least not yet. We've seen volatility spikes in other asset classes, in rates and currencies, but we have not seen it yet in equities. At least we haven't seen it for quite some time. So the VIX index closes the week lower, hovering just below 25. Lastly, let's talk about what we have next week. It's a big week in the news category. We've got consumer confidence comes out. Likewise, we get second quarter GDP, which, as I aforementioned, expectations are for a negative number, which would make 2 consecutive negative quarters, which is a textbook recession, a textbook definition of a recession. We also get the July FOMC meeting, and while we've seen some fluctuation in expectations on how much the Fed would hike next week, 75 basis points is fully baked into the cake. That is what the market is expecting. It's what happens after that. Will they go at a more measured pace, slower, due to the fact that there is recession fears out there? And lastly, we have earnings. We will continue to get earnings. We get big names next week. A lot of the blue chippers will hit the tape. It'll be very interesting to see how that all balances out between economic data, Fed and Fed forecasting, as well as earnings and earnings guidance. So a lot going on that will affect the stock market next week. As this week we ended the week higher, but we ended the day lower. Did get about 4,000 this week for the first time since June. And we'll look ahead. It should be a very choppy week with a lot of data, a lot of Fed meetings, and yes, even a lot of earnings.